tax invoices reassurance requirement under Section 42 of the VAT Act. This section requires only VAT registered person to issue a tax invoice for purchase of the time of making taxes supply. It is also limits members. Mr. Speaker, this clause calls again us as members to reject this bill. This may be resort to heavy burden on compliance on small, medium enterprises, killing the same business, business, Mr. Speaker. Lastly, Mr. Speaker, is the issue of items being moved from zero rating to exemption, Mr. Speaker. Mr. Speaker, we have seen items being moved from zero rating to exemption, which has an effect on the moving of items from exemption will.
The member for Kabuchai. And all members, anyone who has no card, please go get a card and then log in. And allow me, as the chair of this session, to follow this order in the order at which you logged in.
Yes. Thank you very much, Mr. Speaker. Mr. Speaker, today is a very important day for Kenya. It is a day, Mr. Speaker, that Kenyans are alert everywhere, because what the decision we are going to make in this House, Mr. Speaker, affects their life in its entirety, Mr. Speaker. Mr. Speaker, having gone through all this bill, when I tried to align with the roadside advertisements, the Speaker pronouncements by the head of state that is going to take care of people who earn 30,000 and below. 30,000 below. 1.5 million workers in this country, Mr. Speaker. Those aspirations, Mr. Speaker, is not taken care of here. I've gone through it. If this government wants to walk the talk, 1.5 million Kenyans who get 30,000 below have a dependency rate of 10 million who rely on them, Mr. Speaker. If it is not found here, this is the only tax law that comes to this House for us to pass. No one, including the minister, no one, including the director, can propose a tax law without this House passing the tax law, Mr. Speaker. So we are here, Mr. Speaker, to actually find out if it is not here, this thing must be thrown and rejected in totality. Yes. Mr. Speaker, Mr. Speaker, when you go to it.
Honorable Majimbo, order. There is a point of order.
Thank you.
Honorable Speaker, I rise on the point of order, Honorable Speaker, on matters relevance. Honorable Speaker, what we are discussing today here is the report by the Finance Committee that is already before us. We are not discussing what is not in the report by the Finance Committee, Honorable Speaker. Honorable Speaker, the issues raised by the Honorable Member for Kabuchai, that pronouncements were made by His Excellency the President somewhere in the roadside, it is the responsibility of this House to legislate, Honorable Speaker. It is not the head of state to legislate, Honorable Speaker. If he made his pronouncements there, at the point he will bring them here, Honorable Speaker, we will have an opportunity. We will have an opportunity to discuss.
Take your seat.
Honorable Speaker,
take your seat.
Honorable Speaker, you will not allow head class, Honorable Speaker. This is a House of
Take your seat.
Honorable Speaker, this is a House of debate.
Take your seat. Take your seat, Honorable Soro. Order. The Honorable Majimbo. The Honorable Jack Wamboka. This House will listen to the Honorable Majimbo in silence. Yes. The Honorable Majimbo will remain order. The Honorable Majimbo will remain relevant in his submissions to ensure, because there's no law, and you know it very well. We are not in the old constitution. We have a new constitution that give parliament powers. We don't order. We do not need the president to do anything for us to discuss any matter in this House. It belongs elsewhere, and you know that very well. So let's maintain decorum, and I expect all of us to be decorous in this morning sitting so that you can proceed with doing. Order. The Honorable Majimbo will be heard without any further point of order. Go ahead.
Yes, thank you, Mr. Speaker. Mr. Speaker, I don't want to be tempted, because I'm a very good singer. I don't want to be tempted to sing the song that Kenyans sang for Honorable Soro in Kusi Stadium, because it touches on his private part. Mr. Speaker, when we come to this bill, Mr. Speaker, Mr. Speaker, exactly, Mr. Speaker, Part A, Section 1, number 169, Mr. Speaker, which touches on mitumba in Kiswahili. In English, Mr. Speaker, it is written here as worn clothing and other worn articles. Worn clothing. Mr. Speaker, this product has been moved from zero rated to tax exempt. What does that mean, Mr. Speaker? We went to school properly. We know when you cannot claim any tax on it, then you will pass it to the consumer. That is what we, Mr. Speaker, the price of mitumba will increase. This House, Mr. Speaker, does not, Mr. Speaker, we must be honest on what we are bringing here with the members of this country. Mr. Speaker, when I come to, Mr. Speaker, we are reading, Mr. Speaker, and we are seeing me referring to every clause. Mr. Speaker, when you come to the non-resident landlord, Mr. Speaker, that article here, Mr. Speaker, they say that actually the imposition of non-resident rental income tax. Mr. Speaker, you realize that here it says that actually a tax to be known as non-residential rental income tax shall be payable by that non-resident person at the rate specified in the third schedule. Mr. Speaker, when you go in the third schedule, and I've gone to the third very properly here, the third schedule, Mr. Speaker, the only relative close to that is Mr. Speaker, the only clause that is close to that, Mr. Speaker, is C1. C1, Mr. Speaker. And on C1 it says, in respect of a rent premium or similar considerations for the use of occupation or removable property, 30%, Mr. Speaker, is payable. We want this committee to tell us, before the 30% that is imposing, what was that percentage before? It was 7%. Where the tenants were withholding, they are withholding the money for the purpose of KRA. It was 7%. In this document, Mr. Speaker, we imposed 30%. 30%, Mr. Speaker, means what? If you are paying rent of 10,000, Mr. Speaker, you will have to submit 3,000, Mr. Speaker.
Honorable Soro, allow the Honorable Majimbo to finish his submission. You'll respond to him. You'll respond to him. Go ahead.
Mr. Speaker, I will further inject, Mr. Speaker. When I'm injecting this sense, Mr. Speaker, the whole nation is watching us. Yes. This House is making the law for posterity. We must put Kenyans in their right position. And Mr. Speaker, Kenyans are not fools. We brought here. And it must be put in here. It is nowhere we are saying, and that's why, Mr. Speaker, we are saying, we are telling this government, Mr. Speaker, to be a one-term government. It is going to be one-term government because, Mr. Speaker, it doesn't carry the aspirations of the Kenyan. Thank you, Mr. Speaker.
Now, I want to request as follows, because I know all of us are emotive. Let's just be factual. You know, I'm listening to Honorable Majimbo, and he refers to clause 169. And you know it's not there. So, order. Just sit down. I will. Every member in this House will have their say. In fact, I want to request the following: that because all of us want to speak, if you could limit your intervention to 5-6 minutes, I don't want to control it myself, so that every member is able to get a chance to speak. I'll be very happy. What I will not do, and I want members to be decorous, I'll not stop any member, whether they're opposing or proposing, from saying what they want to say. And that's why I want all of us to have our time and please maintain decorum. The next member on the line is Honorable Mark Mwenje.
Oh, thank you, Honorable Speaker. First of all, Honorable Speaker, I rise to raise some very serious issues against this finance bill, Honorable Speaker. Honorable Speaker, one of the issues that I have is Section 35, Honorable Speaker, of this finance bill. Honorable Speaker, this specific section imposes excise duty on cell phones, which seems to have moved from the point of importation to the point of activation. Now, Honorable Speaker, one of the issues that I have with this is that the government is not losing any money. Why are we changing from the point of importation where you pay duty on 50 cell phones, but at the point of activation when it's limited to a specific cell phone? My concern, Honorable Speaker, is with the Commissioner, because at the point of activation, then you tie this phone to a specific person, and there is because you've not defined, and Honorable Speaker, you as a lawyer and yourself, you know that if you don't provide a definition of this activation, what will be put there? What if you put in a spyware? What if at a certain point you can shut down a specific cell phone belonging to specific someone? So, Honorable Speaker, for me, this section 35, I don't see the point to it, because to me the money is the same. So why are you changing it? Honorable Speaker, section 45, this is on the Tax Procedures Act. Now this one I don't want to belabor it because it was spoken about yesterday, the issue of agency notice, Honorable Speaker. And I just want, I hope the chair would be here, but the administration of fair hearing is a constitutional right. Even if you delete that provision, even if you amend it, the majority leader was here, Honorable Kaluma, they were very specific on how they think this has been abused. But it doesn't matter, it's been provided for under the Constitution. So even if you delete this provision, I can assure you somebody will go to court and this whole thing will collapse. So we might as well not play around with something that we both know is going against the Constitution, Honorable Speaker. Honorable Speaker, under Section 23, in the same act, Honorable Speaker. Now, this is on capital gains tax. Now, the threshold, whenever you have a transaction that derives value in Kenya, usually for capital gains tax is at the point of where you reach a threshold of 50%, Honorable Speaker. That is the standard within East Africa and quite a number of African countries. Now, this is lowering it, with this amendment, to almost 1%. If you look at our income tax, it provides it at about 20%. So, to me, what you will do is that you'll make all these investors who come to Kenya and at times are exempt from this capital gains tax because the value gained in Kenya does not achieve the 50% threshold, all these people are going to go to our neighbors. So who's losing? So all those investment firms in Kenya, all those law firms that are working here, all those funds that work in Kenya, the insurance companies, all those are going to start losing business right here in Kenya. Now, Mr. Speaker, one of the things that yesterday, if you'll remember, and once again, I'm happy the Honorable Ruto was here because I believe he mentioned this issue. Taxes should be predictable. That's what the chair said yesterday. And any accountant, anyone who is in the tax regime says that taxes should be predictable. It means 5-10 years. Anybody investing in Kenya should have an idea how the tax regime is going to be. Now tell me this, Honorable Speaker. 1.5% withholding tax on scrap metal, which the Honorable Mbadi, when he was highlighting the budget, mentioned right here. It's in this bill. Explain to me, Honorable Speaker, how predictable it is to impose a tax in 2024, to remove it in 2025, to bring it back in 2026. How predictable is that? In 3 years, you've changed the tax 3 times. Now, let me tell you what's going to happen. Some of these companies, Honorable Speaker, for me, I'm talking even about my constituency. One of the largest steel-making companies, Tonoka, is in my constituency. What it means is that they will have to start reducing the number of people who are working there. So it directly impacts the jobs that are there, Honorable Speaker. And I'll explain as I move forward, Honorable Speaker. Now, when it comes to raw materials, which I also used, Honorable Speaker, allow me actually to talk about coal first. We've now imposed 5% excise duty on coal, which some cement companies, some steel companies use. Now, that means, first of all, you should all know, coal is not available in Kenya. We import it. We import coal. So, in Kenya, now, at the current rate, we are at 9.5%. Uganda is at 1.5%. Tanzania is at 2.5%. All these countries are importing coal. Now, when you consider what has been happening, because Honorable Speaker, coal is used as a substitute for energies. So at times, and you know the fuel prices, Honorable Speaker, some of my companies which have been using diesel, one of these companies in my constituency, when electricity was lost for 2 days, they incurred a cost of 3 million. Electricity in 2 days. Fuel, one of my companies uses fuel about 248 liters of diesel per month for fuel in transport costs. So when diesel went up by 46 shillings, that's 11,408,000 per month. Now, even if that amount has reduced, you can prorate it. You can see the amount of expenses are there. And then you increase the cost of coal as well. Honorable Speaker, on raw materials, because raw materials, this has changed, especially in steel and other sectors. So there's a levy of about 17.5%. Now allow me to stick to the steel companies, Honorable Speaker. Local billets, manufactured locally, $650. Imported billets, $490. The wire rods in Kenya, the taxes that are charged, you've seen those wire rods all around, is 47% tax in Kenya. Billets is 22%. When we go to Uganda, 1.5% Uganda, 1.5% Tanzania, 1.9% in Rwanda. So what does this mean? Honorable Speaker, it means the construction industry, everything is going to go up. So even in the affordable housing that we are talking about, by increasing these taxes, those affordable houses, the cost of constructing those very affordable houses, the prices are going to go up. Now, what does this mean, Honorable Speaker? The companies that are operating in Kenya, the cement companies, the steel companies, what they've done is that they're opening small operations across the border in Uganda and Tanzania, and the companies in Kenya stop manufacturing and become trading companies. Honorable Speaker, 25 steel milling companies from Kenya have left and have gone to Tanzania and Uganda, including one company from my constituency called EMCO, and even steel structures that have now gone to trading rather than manufacturing. These are jobs that have been lost right here in Nairobi, right here in my constituency, and it's because of some of these taxes that are coming up. So that means, Honorable Speaker, some of our companies have now become trading companies. Honorable Speaker, there is a provision for ESC carve-out goods, Honorable Speaker. This ESC carve-out is for goods that have originated within the East Africa community. By removing this specific carve-out, Honorable Speaker, we are violating the very same treaties that we have with our East African countries. So we are violating bilateral agreements that we have with the East African community. That means very soon, some of the privileges we have with trading with Uganda, Tanzania, and Rwanda, this is going to change. So why should our finance bill violate the ESC carve-out that was agreed bilaterally between all these countries, Honorable Speaker? Honorable Speaker, the issue of zero rating and exempt, we need to clarify. You know, we sit here and we say, we've exempted you from tax, we've exempted you from this, we've exempted. Honorable Speaker, we all know zero rating is better than exempt. So if some of these imported clothes, worn out clothes, we've moved them from zero rating to exempt, it means you cannot claim input VAT. And this is where the devil in the details is. That means the cost of those Mutumba clothes will go up. Finally, Honorable Speaker, when it comes to these rental houses, I'm a member of parliament from Nairobi. Embakasi West is full of rental houses, the entire constituency. Some of these people are foreigners. They are foreigners, they are non-residents, they are not here in Kenya. If you affect the cost of rental prices the way it's been discussed, it means you're increasing rents for all the people living in my constituency, Honorable Speaker. And for that reason, and many others, Honorable Speaker, dotted by the others, unfortunately, I cannot support this bill, and we'll be bringing a lot of amendments so that we can ensure we don't burden the Kenyans that are already.
Thank you so much. Honorable members, I'm happy to listen to Honorable Mwenje because he spoke about 10 minutes without attacking anybody, without going outside script. He's done so well. If we did that, all of us, we'll have a very good debate. The Honorable Jaku Amboka, this is your chance.
Thank you. Thank you, Honorable Speaker, for the opportunity to speak. But first, let me make this clear, that we will debate in the way we deem fit and necessary, as long as it conforms to the laws of this House. So nobody should lecture us, Honorable Speaker, how to align our debates, how to debate, and on that, Honorable Soro, keep quiet. Honorable Speaker, I rise to oppose the Finance Bill 2026 in its present form. And let me say from the outset what this debate, Honorable Speaker, is not about. It is not about whether the state needs money or not, Honorable Speaker. Of course it does. Roads have to be built, Honorable Speaker. Hospitals must be stocked. And you know my pet subject of teachers. Of course, teachers have to be paid, teachers have to be hired, and police, and so forth, Honorable Speaker. My quarrel with this bill, Honorable Speaker, is how the government wants to raise the revenue, Honorable Speaker. When you read it closely, and not just in the headline rates, but in the schedules where the real work is done, this is a bill that will make life more expensive to ordinary Kenyans. And it does so quietly, Honorable Speaker. It's like cancer. It eats you quietly, but ultimately you are destined for death, Honorable Speaker. Honorable Speaker, my single biggest problem with this bill is that it hides price increases inside technical tax languages. Its favorite trick is to move essential goods from zero-rated VAT to exempt VAT. To most Kenyans, these two words sound the same. And of course, it's very mischievous, Honorable Speaker, of the government. They are not the same. And the difference is money out of pocket of the Mwananchi. Honorable Speaker, when a good is zero-rated, the seller charges no VAT and still recovers the VAT paid on inputs. So the goods are truly free of the tax. When a good is merely exempt, the seller charges no VAT but cannot recover the VAT on inputs. So that tax becomes a cost of doing business and is passed on the consumers, who are the ordinary Kenyans, Honorable Speaker, and that is what we are saying. Life becomes more expensive. The life for Kenyans this time, this period, in this government has become more unbearable. So when the bill takes medicine manufacturing inputs, animal feed inputs, solar and lithium batteries, electricity buses, and even bicycles, Honorable Speaker, who uses bicycles? Are the common Mwananchi, the small people down there. Every big person can afford a car. Honorable Speaker, clean cooking stoves and locally assembled phones and moves them from zero-rated to exempt. It is quietly pushing costs onto the consumer. The Mwananchi will not see a new line on the receipt, but they will feel it at the counter. If you tax the inputs of medicine, medicine becomes more expensive. And that is healthcare, Honorable Speaker. Every government has a responsibility to ensure that it leads a citizenry that can afford healthcare. So if medicines go up, Honorable Speaker, the cost of healthcare goes up. And that is what we are saying, that this government must be relevant to the needs, day-to-day needs of the people, and that the cost of living goes up. And Honorable Speaker, we all represent Kenyans. It does not matter whether you represent a Kenya Kwanza government, a Kenya Kwanza citizen, or a Linda Mwananchi citizen, Honorable Speaker. A Kenyan citizen is a Kenyan citizen. Honorable Speaker, if you tax the inputs to clean energy, the family trying to leave charcoal and kerosene behind pays more. This is why I call this a cost of living bill. It does not shout. It does not raise headline VAT rate. It raises the cost of living through the back door. And honestly, Honorable Speaker, it kills slowly, but ultimately, mwananchi goes down. I come from a sugarcane farming region, Honorable Speaker. And this now tax are applicable to sugarcane transportation. And the Honorable Meli knows this, Honorable Speaker, because at the end of the day, if this one is introduced, Honorable Speaker, the manufacturers will pass this cost to the consumer, Honorable Speaker. We are still struggling with the prices, the tonnage prices that have been lowered by this government, Honorable Speaker. Whereas cost of living is going up, the tonnage, the cost of per ton, Honorable Speaker, for sugarcane is going down. Where on earth, Honorable Speaker? Where on earth? Only an insensitive government that does not respect itself goes through these things, Honorable Speaker. Honorable Speaker, finance bill should not punish people for buying the very goods that our own national policy tells them to buy. We cannot stand in this house and speak about universal health care, food security, and a green economy, and then pass tax measures that make health, food, and clean energy more expensive. This is not a revenue policy. This is a contradiction written into law, Honorable Speaker. Honorable Speaker, I'm equally concerned that this bill taxes the digital economy in a way that lands hardest on small people. It pulls card payment fees, switching, clearing, and settlement system into a tax net in a way that raises the cost of electronic payment. These are not luxuries. These are the payment roads of a modern economy. The trader receiving money on a card machine, the shopkeeper, the young person paying online, the citizen paying for a government service on their phone, all of them travel these roads, Honorable Speaker. The state asks Kenyans to go digital, to formalize, to leave cash behind. It cannot in the same breath make the digital road more expensive, Honorable Speaker. Who uses this digital platform, Honorable Speaker? They are young people. These are young people who probably just sit at home, who make a living, Honorable Speaker, out of the digital platforms. Some of them work at night. So when you make it more expensive, whom are you punishing? You are punishing the very mwananchi you promised that you will lift them from the bottom to up. And it has become now from bottom to bottom and to the bottomless bottom, Honorable Speaker. Honorable Speaker, and then there is a phone. The bill proposes a 25% excise duty on mobile phones, charged at the moment the phone is activated, Honorable Speaker. The phone is no longer a luxury in this country. And you know it. The phone may be a luxury to senior people in this country because you just need to call and receive. But for young people in this country, Honorable Speaker, the phone is a way to earn a living, Honorable Speaker. It is how a young person looks for a job, how a student learns and receives their notes, Honorable Speaker, work on their assignments, Honorable Speaker, how a farmer checks the market, how a mother sends money, how a citizen reaches a citizen. To tax, Honorable Speaker, the question before us is, in the end, Honorable Speaker, a finance bill must raise finances in a manner that does not make life unbearable. In this case, Honorable Speaker, the finance bill that we are talking about makes life too difficult for every.
All members, you agree with me that I've given 4 chances this side and interrupted. So I'll also give this side another 4 chances. Then we come back this side. And I have to be fair to the House. I must be fair to the House. And it doesn't matter what you do on that matter. Because I've decided that's what we're going to do. So this side, we're going to have another 4, then 4 this side. So Can I get from the list I have here, the first one on this side is Honorable Marianne Keitany.
Thank you, Honorable Speaker. I know they are usually used to me sitting at the front there. Today, I decided to sit next to Honorable Mukunji so that we can converse a little. Honorable Speaker, I stand to support the finance bill that is laid before us. And the first aspect I would like to bring on the finance bill is the issue of exempt and zero rating of certain items, especially the items like the locally assembled, manufactured mobile phones, electronic buses, lithium-ion batteries. The bill initially proposed that these items be moved from zero rated to exempt. But the proposals that have been put on this bill is that these items will go back or will be reverted back to zero rating, because that proposal had been given in the Finance Act of 2023, and that therefore promotes this particular industry and ensures that these items continue to get more traction in the market, and therefore they become very affordable. The other issue I'd like to raise on this finance bill is the gratuity period that had been raised for people who are earning or who are on 3-year contracts. Initially, the bill proposed that gratuity be zero rated for a gratuity be paid to be exempted for employees who are on gratuity or about it was open for everyone. But for now, we've said that gratuity be charged on employees who are on a 3-year contract. And this would then propose that even for those employees who are on a 1-year contract, that can be proposed in the Committee of the Whole House, that employees who are on a 1-year contract can also benefit from the gratuity. The other issue that I would like, to bring out here is the issue on the scrap metal. You know, scrap metal is an area that has been used to kill a lot of our infrastructure, mainly things to do with copper cables and those infrastructures that assist a lot in our electrification, rail. And there's a proposed a proposal of a 1.5 withholding tax on the sale of scrap metal materials. One, this is going to regularize the market so that all sales of scrap metal will then conform to what is happening in industry. But more importantly, it also secures the scrap metal.
Could we listen to the Honourable Member for Alda in reasonable silence?
Thank you, Honourable Speaker. The one thing that it also does is that it also ensures that the scrap metal revenue that is going to be benefited from scrap metal dealers, the income from it is going to be regularized so that every person, every sales or every business then is able to pay taxes. And one thing, Honourable Speaker, that I notice is that many people don't want Kenyans to pay taxes, but we need the taxes to be able to run this country. And therefore, proposing the 1.5% withholding tax on sale of scrap.
Order. Don't remember, where's your card? Where's your card? No. I can't see it. Intervention in the house are not. In this house, you don't stand up and raise your hands. You put your card in. Proceed.
Thank you. Thank you, Honourable Speaker. So the 1.5% on tax will also avoid and reduce revenue leakages that have been happening within the industry, because we want every Kenyan to be able to pay tax and be able to use the taxes, or the taxes be used to grow our economy and do the businesses or all those expenses that we put under the Committee of Supply, because we've already said we want to build roads and want to do many other things. The other issue, Honourable Speaker, is the issue of exemptions of many businesses that we are removing from tax zero rating to tax exempt. That basically is to help in the budgeting so that these budget deficits that we've had.
What is order? What is out of order?
Thank you, Mr. Speaker. My concern, is it honorable for the Honorable Member of Parliament to insinuate that scrap metal dealers deal in stealing copper wires and railway, whatever you affecting the infrastructure? We have genuine traders who are conducting this business, in the scrap metal business. You cannot insinuate that you are imposing a tax because those people deal in stolen goods and stolen infrastructure.
Point made.
It is
I'm point of debate, in my opinion. I'm sure you got a chance to debate that particular point. Please proceed. It's a point of debate that you can debate when you get a chance to debate. Go ahead.
Thank you, Honorable Speaker. The issue I was dealing with is issues of vandalism that happens in that sector. And therefore, Honorable Speaker, that issue of vandalism, which we know happens in this country, I have not said the scrap metal dealers, but they deal in, most of them may deal in vandalized items. So the issue of introducing the 5% tax, 1.5% tax return will also aid in helping that particular sector become regularized. The other issue I needed to raise, Honorable Speaker, is that most of the taxes that we've now reduced from zero rating to from zero rating to tax exempt is to also ensure that the budget deficit that we see in our books is reduced, because one of the main issues that we have in terms of our budgets and in terms of debts for this country is the budget deficits that we see because of many items that are zero rated. By removing them from zero rating to tax exemption, Honorable Speaker, will allow that our budgeting become neater and our books become neater, because many times our books are looked at when we want to advance or borrow monies, and therefore that will help our tax incentives. The last issue that I'd like to raise, Honorable Speaker, is on the issue of Mitumba. I think a lot of our members have talked about Mitumba, and I want to say that the proposals that are here do not plan to raise taxes on Mitumba clothes, as opposed to what has been put on the floor. The proposals that we have here is not to raise any Mitumba. It is an issue that was raised by the sector, the association, but the committee also proposes that sector, the Mitumba, the taxes that were supposed to be levied are not levied on the Mitumba items. So we do not expect any price increase on Mitumbas as proposed or as mentioned in the House. I thank you, Honorable Speaker, and I support.
Well said. Honorable Soro, go ahead. This time not a point of order. This time was debate.
Thank you very much, Honorable Speaker. Honorable Speaker, from the onset, I want to say that I support the report by the committee entirely. And I want to be very particular on the matters that have been raised by our colleagues. Honorable Speaker, this House has been told that the report or the proposal in the finance bill seeks to raise the tax, the tax on the 16% on Mitumba, Honorable Speaker. Far from it, Honorable Speaker, or to the contrary, is that what this particular bill seeks, Honorable Speaker, is to completely move the Mitumba to exempt status. Currently, Honorable Speaker, people pay, or those vendors that deal on Mitumba clothes, Honorable Speaker, pay 16%. But looking keenly on the first schedule and the second schedule, Honorable Speaker, and in particular, I think clause 21, that has been deleted. It's no longer there. There is nothing called increase on the percentage of Mitumba imports, Honorable Speaker. So that is one of the lies, Honorable Speaker, that this House is being told. Honorable Speaker, this House has also been told about the non-resident landlord's tax.
I need to say that again, because I've heard it and I almost believed it, that there is tax increase on Mitumba. Could you just please say that again?
And I really hope that the honorable members are listening. And the Honorable Speaker, if you can protect me from the Honorable Majority Leader and the Deputy I don't know what the Deputy Minority Leader is confusing the Majority Leader, because I think he needs some lessons. But Honorable Speaker, this is my point. Far from what they are telling people, Honorable Speaker, that there is a 16%, there is an increase in the taxation on Mitumba, Honorable Speaker. The first schedule of this bill, Honorable Speaker, and the second schedule speaks to the contrary. There has been a 16% tax, Honorable Speaker, on the Mitumba, which has been deleted, Honorable Speaker, under clause 21, Honorable Speaker, in the previous bill. So when they tell people that Mitumba price will go high because of the increase of taxes and everything. That is a lie, Honorable Speaker. Number two, in fact, it's actually being moved to exempt status. It has been 16%. Now it's being moved from 16% to the exempt status, Honorable Speaker. That should be clear, and I'll challenge any person that will rise to speak, Honorable Speaker, to speak to the contrary with the bill, Honorable Speaker. That is one. Two, Honorable Speaker, they have told you, or they've been addressing this House, Honorable Speaker, saying that there is an introduction, Honorable Speaker, of the non-residents landlords tax, Honorable Speaker. What do we have currently, Honorable Speaker? Honorable Speaker, landlords pay tax at the rate of 7.5% currently. All the landlords that own the houses, Honorable Speaker, pay 7.5% in terms of tax, Honorable Speaker. Even the non-residents, Honorable Speaker. Members of this House, Honorable Speaker, who are well-schooled will tell you that you cannot tax on a single item twice, Honorable Speaker. What usually happens with the taxes on the landlord's income, Honorable Speaker? Currently, Honorable Speaker, landlords pay, the non-resident landlords remit their taxes through their tenants, Honorable Speaker. They are not residents of this country. They live, for example, in the US. They work somewhere in, in Europe. It is the responsibility of their tenants to remit that particular 7.5, Honorable Speaker, on behalf of the non-residents, landlords, Honorable Speaker. And this should be very clear. Currently, it is at 7.5%, and all landlords pay. All of them, whether it is residents or non-residents, as it is right now. But now, the non-resident landlords, Honorable Speaker, remit their 7.5 through their tenants that live there. So what this bill seeks, Honorable Speakers, to do is to at least reduce the hassle by the tenants, Honorable Speaker, not to be remitting on behalf of their landlords. I mean, it is just to tell them, hey, you non-resident landlords, pay or remit your taxes directly. It does not seek to introduce a new tax. It is not new. I mean, Honorable Makali Mulu, you can inform the House honestly that you cannot tax a single item, twice. It is not practical, it's not possible. It is simply realigning the structure of payment from the tenants to the landlords, Honorable Speaker. Honorable Speaker, there is also an issue that has been raised here about the gratuities, Honorable Speaker. This bill, Honorable Speaker, seeks to exempt employment gratuities from the income tax. And Honorable Speaker, it's very particular. Provided that the service contract covers a continuous period of at least 3 years. Honorable Speaker, honestly, why do you say reject something like this? How do you tell people that you are on contract, your gratuity is is being remitted? Of course, you pay income tax on your gratuity after serving 3 years. This bill seeks to exempt them from that. You are telling them we are rejecting this. Are we being fair? We are moving, Honorable Speaker, to the next step, which is the committee of the whole House, Honorable Speaker. If any member here has an issue with that particular clause, Honorable Speaker, the only thing you will have an issue with is the reduction of that 3-year period, say to 2 years or 1 year, so that even those who are within the 1-year cap can be able to benefit from this. You can't just say, we reject this. How do you just reject a proposal of such nature, Honorable Speaker, when we seek to protect those people who are on contract, Honorable Speaker, from remitting income tax? So, Honorable Speaker, there are so many things, Honorable Speaker, that I'm saying here, Honorable Speaker, that are all lies, Honorable Speaker. What this particular bill, Honorable Speaker, is also seeking to curb lifestyle assets by imposing a 50% excise duty on the excisable value of antique, vintage, and classic vehicles that are worth above 10 million. That at least, sort your bliss. Even as you bliss around the country, sort it. So, Honorable Speaker, looking at this bill, and I invite my colleagues to read. Because what my colleagues are doing, Honorable Speaker, in this House is dancing to the tune of an old song, which is long gone. That our work is just to reject. Honorable Speaker, that is no music anymore. That is not music anymore. Introduce something new. Challenge and say, this is not workable, let's work on this. But just saying reject, Honorable Speaker, and you are speaking to yourself. You are dancing to old music of 1980, Honorable Speaker, and nobody is listening to that guitar, Honorable Speaker. It is already long gone. This is the best proposal, Honorable Speaker. It is going to save this country. It's going to help the people, Honorable Speaker. Unless you want a tenant to remit taxes on the behalf of the non-resident, like Honorable Mbui was saying yesterday, Honorable Speaker, then, I mean, you want to continue adding the hassle by the tenants, Honorable Speaker. Let's be reasonable. It is one thing to oppose, but it's one thing also, it's another thing to be factual and place things on the table as they are, Honorable Speaker. Give us the best proposal. You are saying the gratuity should not be 3 years. Bring a proposal in the afternoon when we go for the committee of the whole house or tomorrow or whatever time that will be going, Honorable Speaker, and just say, okay, fine, reduce that income tax remittance, the exempt, from 3 years to at least 1 year contractual people, not just saying reject. With those many remarks, Honorable Speaker, I beg to support, and I know Honorable Kalasinga has learned something. At least I've read for him. Thank you very much.
Well said, the Honorable Cynthia Muge.
Thank you, Honorable Speaker, for giving me this opportunity to add my voice to this Finance Bill of 2026. And Honorable Speaker, allow me to acknowledge the committee that has been able to sit through this very important document for a good number of days and the suggestions and recommendations that they have given. Honorable Speaker, I'm happy to see that the committee actually went through most of the proposals that were brought to its attention and most of the lobby groups that were able to actually look into the matters and the issues that were raised under the finance bill, and they have been able to make comments in regards to the same. Honorable Speaker, I also want to acknowledge and be able to support the very progressive parts of this finance bill. If you have had an opportunity to look at this finance bill, you will realize that it has a lot of progressive parts, and it also has some parts that need to be looked into. Honorable Speaker, most of the time, the parts that need to be looked into normally overshadow the parts that are really progressive as provided into this finance bill. Honorable Speaker, if you look at the whole agenda and the whole objective of this finance bill, you can be able to see that it is trying to enhance the issue of tax administration. And Honorable Speaker, if you look at the specific articles of this particular, clauses of this particular finance bill, you will realize, Honorable Speaker, that there are other wins for Kenyans that have been listed here. And Honorable Speaker, because I do not have the time or the luxury of time to be able to look into each of the clauses, I only want to speak to some of the issues, Honorable Speaker, that I have noted and I have been able to appreciate. Honorable Speaker, allow me to speak to the issue about the tax exemption on loans that have been taken for purposes of building houses or buying houses, Honorable Speaker. 360,000 Kenya shillings, Honorable Speaker, is not little money. It is a lot of money for someone who gets an exemption when they're trying to get a place for themselves so that they can be able to live. And you can be able to see that in Clause 10, Honorable Speaker. You also look at the introduction, Honorable Speaker, of a pre-populated tax return system. Honorable Speaker, most of the people and most of the business people that sometimes operate in these spaces, they do not have the technical know-how of what is needed of them or what they do is described as. And Honorable Speaker, this particular finance bill is actually introducing a pre-populated tax return system. Honorable Speaker, that will make compliance of tax returns better for the people who do business and even for the people who need to file their returns, Honorable Speaker. And that is highly appreciated from this particular finance bill of 2026, Honorable Speaker. That also ensures that we have efficiency and we also have reduced the tax compliance issues that we have been dealing with for a better part of our lives, Honorable Speaker. Honorable Speaker, we also have a very interesting provision here. It has been able to exempt excise duty on bottled water. You know, Honorable Speaker, most of the time when you buy bottled water in the shop, you wonder why you have to pay that amount of money around there. And Honorable Speaker, this finance bill has been able to address that issue that most Kenyans have been raising most of the time, Honorable Speaker. Again, Honorable Speaker, if you look at Clause 3, it has spoken to the issue of exemption of gratuity payment from the people who are retiring. Honorable Speaker, a lot of years previously, people who are benefiting from gratuity have had to pay a second tax on the same. And this finance bill, Honorable Speaker, is explicitly clear that we cannot continue taxing gratuity. And Honorable Speaker, this is a plus for the people who are retiring or the people who have been rendering services in this country. They can get their gratuity without being taxed a second time. That, for me, Honorable Speaker, is a plus to the Kenyans in this country, Honorable Speaker. Honorable Speaker, I have had a lot of discussion regarding to clause number 4. that is speaking to issues of introduction of non-resident rental income tax, Honorable Speaker. Honorable Speaker, if you are not a citizen of this country and you have some property, Honorable Speaker, that puts some money in your pocket, it is only fair, if you ask me, Honorable Speaker, that you also substantially and fairly contribute to tax the tax contribution in this country, Honorable Speaker, so that we are able to then broaden our tax base. And Honorable Speaker, I don't think this is something that should be questioned. You know, some people and most of the members here, Honorable Speaker, have had an opportunity to travel to other countries. When you go to those other countries, Honorable Speaker, there is a lot of restrictions as to who and who can be able to acquire property, especially the developed houses, Honorable Speaker. There's a lot of regulations in that country. And I don't think, Honorable Speaker, it hurts anyone for the people of Kenya to also be keen enough to make sure that anyone who comes here to invest and is able to enjoy anything and income that comes from the investment here also fairly contribute to the tax of this country, Honorable Speaker. And I think that is progressive, Honorable Speaker, as much as there's a lot of discussion around it. I support it and I think it's really progressive. Honorable Speaker, I have also looked at clause number 29, which is speaking to the invoices for tax purposes. Honorable Speaker, there was a provision that said you must be registered to be able to do the issues of tax remittance. Honorable Speaker, most people that actually do business that is actually supposed to be able to give to pay tax have been using the lack of registration as a reason why they cannot contribute to these taxes, Honorable Speaker. And Honorable Speaker, I think this particular provision of clause 29 is helping us, Honorable Speaker, so that everyone who is actually doing business and everyone who gets something from somewhere is also able to contribute to this country, Honorable Speaker. Again, Honorable Speaker, lastly, before I sit down, I have seen under clause number 31, the VAT at 16%, the normal percentage, Honorable Speaker. This one is going to help us under the public-private partnerships. You see that this finance bill, Honorable Speaker, has been able to speak specifically on the 16% VAT for any goods or services that are being brought around here so that they can help us or they can be able to deliver a service under the private-public partnership, PPPs, Honorable Speaker. And I think, Honorable Speaker, this is helpful because we need a lot of PPPs for us to be able to implement some of the projects that we have around here. Lastly, Honorable Speaker, you know, when you're looking at tax, at the tax issues, Honorable Speaker, the government, and especially the government of Kenya Kwanza, has also made commitments previously. Part of the commitments that has been able to make, Honorable Speaker, is about the intention to limit zero ratings of items to only items that are being exported from this country. And I think it's fair, Honorable Speaker, because as an administration, you must be able to action the words and the promises that you give to the people. So part of the promises that the Kenya Kwanza administration has given, Honorable Speaker, is to make sure that zero rating is limited to the exports. That is one, Honorable Speaker, to make sure that every person who can be able to do something and be able to export it somewhere else gets to have a tax relief. And Honorable Speaker, the discussion about what can be zero rated and what can be tax exempt is a discussion, Honorable Speaker, that I think as a country and as a people and as a leadership, we should be able to also enlighten our people so that they can have clear understanding on what is zero rating and again, Honorable Speaker, what is a tax exempt. And for this case, Honorable Speaker, I want to support that Kenya Kwanza administration is actually actioning the promises to make sure that zero rating is actually given to export products. So, Honorable Speaker, I want to say that I support the committee's report and the way it has been able to go through the proposal on the finance bill, and I support the provisions that have been given here. And the few provisions, Honorable Speaker, that we have a problem with is the reason why we are here today, so that we can sit during the committee of the whole House and be able to bring amendments that will then make those provisions a little bit more progressive than they are as we speak, Honorable Speaker. So I support the finance bill and I support the committee's report on the same. I thank you, Honorable Speaker.
Thank you. Honorable members, today we have students visiting us from Chambogo Secondary School, Wingi West constituency, Kitui County. We have students sitting in public gallery from Jansil Junior School, Kajedo North, Kajedo County. We also have students from Al Ansaru Nursery and Primary School, Kamkunji constituency, Nairobi County.
Participation. and more importantly, the report that the Finance Committee led by Honorable Kuria tabled before the House. Mr. Speaker, when the Finance Bill was first read in the House, it had very serious issues, which I want to tell Kenyans. The Committee on Finance went through and met Kenyans, met institutions like the Institute of Certified Public Accounts. They met manufacturers. They met individual Kenyans who raised a lot of concerns which were actually in the bill. Honorable Speaker, the committee, in its wisdom, managed to listen to the issues raised by Kenyans. And I want to tell members here that it could be improper. Chair, it would be improper to actually read the initial finance bill tabled in the House without proposals from the committee. Madam Speaker, the purpose of this finance bill actually is to actually address the issues, and the report itself to address the issues that Kenyans raised across board. The Finance Committee, led by Honorable Kuria, moved across over 13 counties. And they met, they listened, and finally tabled a report in the House. And it will be proper, Madam Speaker, to ensure that as members discuss this, we ensure that we discuss the finance bill and also discuss the reports and the proposal contained in that particular report, so that we have an informed view of what we are telling Kenyans. Certain issues that have been proposed, there are a number of amendments which we as members of the House are going to propose to ensure that we have a finance bill that is actually addresses the interest of the Kenyans. Madam Speaker, we have the issue of strengthening international compliance by aligning Kenyan tax framework with standard global practice for trusts and virtual assets. Madam Speaker, there are a lot of issues that Kenyans have raised, especially even on rental income or non-residents. The issue was that the non-resident tax on rent was actually owned the person who is paying tax. But now it is the owner of the house to do it, and it still stands at 7%. There is no much difference, and has not been raised to 30% as alleged by members from the opposite aisle. Madam Speaker, we also have the issue raised by the motor vehicle manufacturers on the electric buses and all those other issues. Zero rating it and exempting it would have given a lot of burden to Kenyans. And I want to thank the committee because they have actually zero rated it and retained the initial response from Kenyans. And I really say this because a number of members in the House are trying to incite the public that the finance bill is not listening to Kenyans. This finance bill, especially on the issue raised, especially the issue of batteries, solar batteries, locally assembled phones, electric vehicles, have all of them be zero rated, but they are not being exempt because we don't want to burden Kenyans anymore. And this is something that everyone needs to know that. And this is a proposal that has been placed before us. And I'm asking members from this House to support the proposals of the committee. Honorable Speaker, we have business groups. They raised alarms that reaching 60% dividend distribution. There was a proposal in the tax bill that any dividends that has been raised by companies, if there is an issue that it is not distributed well, and the monies that is remained was presumed to be profits, it will be taxed. But the committee made a very, very important decision to delete the whole of it. And I've seen members here holding on to something that has been deleted completely. I want us to know very well that the proposals that his House has made are for the Kenyans and for the good of Kenyans. And when we sit here as members of this House, we are not about to tax Kenyans on certain issues which are not there. Honorable Speaker, professional bodies raised a number of issues. And I want to say this. They strongly objected to the removal of the weekends, the public holidays, and all that on tax objections. And the committee listened to them. And those are some of the things that I want us to discuss and look into it. Madam Speaker, we have also the issue of zero rating the tax status for the green energy items, and I've said that, locally assembled vehicles, phones, and the rest. We have also the issue of adjusting the filing of deadlines to give individuals practical windows. Actually, this one was a very wise decision. It affects all of us. It affects Kenyans in every sector. And by reducing that, it does not put Kenyans on strict issue deadline, especially when you are filing your tax returns. Madam Speaker, we have also the issue of Section 29A to the Tax Procedures Act and safeguard legally requiring the Commissioner to fully disclose third-party data sources used in assessment. This one has actually been done away with. And this one was trying to invade into the privacy of members and privacy of Kenyans. And I want the members to really look at what the committee has done very well, so that as we critique and have a better finance bill for the House, we have a balanced view and tell Kenyans. It is not about this House to incite Kenyans and tell them things that are not in the finance bill, and things which have already been corrected by the committee. It has been corrected by members. Already we have proposals to make sure that what the House is going to arrive at and vote for is a finance bill that is going to spur the growth of the economy, to spur the growth of businesses, to make sure that we get the revenues which are actually within range. We are not going to have things that are out of... Lastly, Madam Speaker, we have the committee deleted the punitive proposal on mid-dispute agency notices to robustly defend taxpayers' constitutional rights to fair justice. I want the House to really have this very clearly, that the committee decided that we need to remove punitive proposals on dispute agency notices. Those ones are actually going to affect the taxpayers. And we as members of this House, we are here to defend a taxpayer, and we are also to ensure that this finance bill, which we have it here, is going to make sure that the taxpayer is going to operate in a very fair, in a very objective society, and more importantly, to make sure that this country grows into a better country. There is an issue which, Honorable Speaker, everyone has been talking about, the mitumba. And I want Kenyans to listen to me and on this particular issue. Every other time, Kenyans have been paying 16% on mitumba. But this time, it has been exempted. And that means all the mitumba traders are now going to have better profits. The fact that it was a proposal in the finance bill, the mitumba businesses came to the finance committee. They appeared. They gave the proposals, and the committee listened to them. And when they listened to them, the committee therefore made proposals that let mitumba in this country be exempted, not to be VAT at 16%. Who is the beneficiary? It is the Kenyan. It is the taxpayer. It is the mwananchi. And this is actually going to assist us as a country. Madam Speaker, we also have issues of the bill was trying to establish 25% extra duty on excisable value of telephones for cellular and wireless networks. This one, Honorable Speaker, the committee made proposals to ensure that we don't take the issue of excise duty further to the use of the phone. And they made proposals that this be removed. And Honorable Speaker, these are good things which the bill is trying to address. And I want members in this House to ensure that we critique and give proposals where it's due, but not actually to use it for political mileage. Madam Speaker, I think this is a very good finance bill, which we need to support as a House, and more importantly, to make it better for Kenyans and raise revenue, which is actually going to spur the development of this nation. Look at the roads, look at the housing network, and most of the things that are going on. Madam Speaker, arise and support, and I support that we are going to bring proposals to even make this finance bill one of the best finance bills we have ever had. Thank you, Madam Speaker.
Very well, honorable members, there is a lot of kindly don't lift up your hands. I have you here on this screen. We have a lot of interest. If we keep it short, a lot of us can be able to speak. Honorable Member for Kitui Central, Makali Mulu.
Yeah, thank you so much, Honorable Speaker. Honorable Speaker, I also want to add my voice into this important discussion. Honorable Speaker, I've been seated here since yesterday, listening to contribution by honorable members. And Honorable Speaker, I think it's important we put a few things to perspective so that members can debate from an informed position. Honorable Speaker, this finance bill, this one, the green one, is a product of the executive. What did the executive do? They went through their own public participation, and this bill went through the cabinet. And it is after the cabinet's approval that now it found itself into this house. So what does it mean, Honorable Speaker? It means the intentions in this bill are what the executive intends to do to the Kenyans in terms of taxation, Honorable Speaker. Now, after coming to the House, Honorable Speaker, it was tabled and handed over to our Finance and Planning Committee. What did the committee do? They conducted their own public participation, and as a result of that public participation, we have a committee report. This committee report has not been adopted by this House. It is a proposal which will now be discussed when we go to the third reading of the report. So, honorable members who are telling members that the committee has changed anything here, we are here to do that as a House. So as we debate, we need to look at the intentions of the executive and the intentions of the representatives of the people who already we have a committee report which has come to us. So I want members to be free to debate the executive intentions and the intentions of the committee. Now, honorable members, this finance bill is going to amend a number of other acts of parliament, starting with the Income Act, VAT Act, Tax Procedures Act, and what it is doing, it is amending those other acts which are existing. So on the basis of that, for you to appreciate what is in this bill, you need to look at the original bills. And unless you compare the two, you are not likely to get it right. Honorable Speaker, it's important to remind the honorable members that this country has a document called Medium-Term Revenue Strategy, which provides a roadmap in terms of what we do with our revenue collection. And it's important you look at the macro environment under which we are operating. And that is the document which provides that environment. In that document, it is proposing that as we move to the future, it is important we move VAT from 16 to 14. And once you look at that document that way, then you realize that there are areas where we could have done better. And I want now to go to the document and put some comments, Honorable Speaker. Where this economy is today, Honorable Speaker, any government which cares about the economy and the growth of the economy is a government which should be thinking about putting more money into the pockets of people or allowing businesses to have more cash flow, so that on the basis of that, Honorable Speaker, then you can grow the economy. Otherwise, in a situation where you are taking more money from the pockets of the Kenyans, or you are restricting businesses in terms of cash flow, then you are not doing this country, you are doing the country a disservice. Honorable Speaker, I want to comment on a number of clauses. And for me, the punchline, Honorable Speaker, is where we are talking about putting people into the pocket, money to the people's pocket. And any proposal, Honorable Speaker, which is not putting money into the people's pocket, Honorable Speaker, then is a proposal which should actually be rejected. The first one, Honorable Speaker, when you look at the bill, Honorable Speaker, initially, people would want to claim